Hello, my dear students. Hope you guys are all doing good. Hope you guys are all perfectly fine. I hope that your preparation is going on well and everything is going on fine. So, in this video, I'm going to explain the RTP series. So, in this video, I'm going to specifically talk about the RTP. I will give a detailed explanation of the RTP which has been released for the subject of GST for September 2024 examination. So, this RTP we are going to discuss in this video. Will not take much of a time. So just I will take you through the entire content which has been given in this RTP. So basically we are going to discuss about questions and answers. That's it. There is no such significant amendment which has been given in the RTP to discuss. So we'll be mainly focusing on the question and answers. And I will pay more attention on case scenario based MCQ, and later some descriptive questions are also there that also we'll try to solve. So without doing any delay further, I don't want to waste any of your time. So I will directly come to the point. So let us start discussing the RTP with questions. And the first question which we are going to talk about is case scenario based question. So there is one case scenario based question given here. Let us have a quick look at the contents of the case scenario. So guys, even in the examination also, case scenarios are very advantageous for the students. But as I repeatedly say, if you lack the conceptual clarity, if you don't understand the concepts in a proper way, then you will not be able to answer the questions. MCQs will be a bigger disadvantage for you if you don't have a conceptual clarity. So that's why get the concepts clear. So no matter how many number of MCQs you solve, that will not help you out. Only conceptual clarity will help you. So always when you're learning, focus on the conceptual clarity. If you're very good in your concepts, definitely you will mark the correct answers for the MCQs. Okay, so try to reap the maximum advantage out of that MCQs. So let us start with this case scenario. Let me read the facts of the question, what they're trying to say here. XYZ Private Limited is a mid-sized company which is registered in Delhi. So, and always I say one habit which you have to do whenever you are reading case scenario or when you are reading any question, especially for the subjects like taxation. So read the question slowly. Try to get all the facts. So read the question slowly, and whenever you find some information is important in the question, please do highlight it, mark it, or make a summary of the entire question. So what is the advantage of that is if you highlight the important points in the question, or if you try to present a summary of all the facts, whatever you have read at the time when you are reading the question itself, what will happen is that will save your time. So you will not lose out on the important facts. You need not reread the question multiple times to get the facts. So what you do at the first reading only, read the question slowly. When you find this factor could be important in the question, try to highlight it or try to write a summary of that points, whatever you have taken from that particular scenario. Okay, so the same practice which I generally follow, not just this, whenever I'm reading any content, this is what the habit which I generally follow. If I find something as important, I will try to highlight it then and there itself, or I will try to write a summary somewhere. So please follow this. Okay, so let me start. XYZ Private Limited is a mid-sized company, and where it is registered in Delhi, dealing in the manufacturing and distribution of electronic goods in India. So what is the important takeaway from this line? So they are talking about registration. XYZ Limited is a company. Its place of registration, it is registered in which state? In Delhi state it was registered. So in the case scenario based questions, always the details regarding the place of registration is very important. Why? Because if you remember, in order to decide whether IGST will be there or CGST, SGST will be there, that depends on whether the supply is a interstate supply or whether the supply is a intrastate supply. And how to decide whether a supply is an interstate supply or an intrastate supply? It depends on location of the supplier and place of supply. If the location of the supplier and place of supply are both falling in same state or union territory, that will be an intrastate supply. On that transactions, SGST and CGST will be levied. However, if the location of the supplier and place of the supply both fall under different states or union territories, then it will be treated as an interstate supply, and on those transactions, IGST will be levied. So always it is very important in the question, what is the place of registration? That is very, very important. That is most important fact. You have to compulsorily make a note of it or highlight it. Fine. Okay. So what is the key takeaway from this line? So there is a company XYZ Private Limited. In which state it was registered? In Delhi it was registered. Fine. Very good. Then the company has been operating for over a decade and has a robust supply chain network across the country. Fine. The company needs to ensure compliances with various GST regulations related to return filing, registration, and payment of the taxes. So there is nothing apart from the place of registration, there is nothing significant in this paragraph to be worried about. Okay, next, coming to the next paragraph. The company is exploring to expand its sales channel in India. to distributors in each state. In view of the same, the company has undertaken the following activities in the month of June. So in order to expand their business, they have done certain activities for the month of June. They are giving the details of certain transactions, whatever they have done. First one, they have organized a distribution conclave in Udaipur, Rajasthan, where the distributors from Rajasthan, Gujarat, Madhya Pradesh participated in the conclave held in Rajasthan. The total cost of hotel accommodation was 25 lakh rupees, which was paid by Delhi office to the hotel located in Rajasthan. So now, what are the key takeaways from this first point? Number one, the company is XYZ Private Limited. Where it is registered? It is registered in Delhi. They are conducting one conclave. Where they are conducting the conclave? In Udaipur, that is in the Rajasthan state, they are conducting a conclave. Now, to this conclave, various distributors will come. So this company wants to provide hotel accommodation services. So one of the hotel which is located in Rajasthan, there they have availed accommodation services. Yes or no? So now you tell me, for these accommodation services, what will be the place of supply? If you remember 12 subsection 3, immovable property, services in relation to immovable property. The place of supply will be the location wherever immovable property is located. Hotel is also related to services in relation to immovable property. It will fall under 12 subsection 3 only. So the place of supply will be wherever that hotel is located. So for this hotel accommodation services, place of supply will be Rajasthan. Definitely hotel owner will also be there in the Rajasthan only. So this hotel accommodation services which XYZ Limited has received from some hotel in the Rajasthan. So there the hotel is also located in the Rajasthan. That is, location of the supplier is also Rajasthan. Place of supply is also Rajasthan. So it will be a intra-state supply. And on this hotel accommodation, the supplier, whoever is there, in the invoice, he will charge CGST and SGST. Both he will charge. Able to understand? Clear about it? So that is the first thing. So simply XYZ Private Limited, which is located in Delhi, they have availed hotel accommodation services. As per 12 subsection 3, for hotel accommodation services, the place of supply will be the place wherever that hotel is located. So hotel is also located in Rajasthan. Place of supply is also Rajasthan. It will be an intra-state supply. On the invoice, there will be CGST and Rajasthan's government SGST will be levied. Clear? Okay, very good. Let us come to the next part. So shall we do the questions also simultaneously? Yeah, we'll do the questions also simultaneously. So if you read the question number 1, which of the following statement is correct under GST law in relation to the hotel accommodation services which is received by the company? Whatever fact we have read regarding that, they are asking the question. Let us see. The hotel shall charge CGST and SGST in the invoice issued to the company. Do you agree with that? 100% yes. Next, let us explore the other options also. The hotel shall charge IGST in the invoice issued by the company. Issued to the company. No. The hotel will issue a bill of supply. No, it is a taxable supply. They have to give a tax invoice only. The hotel shall charge CGST and SGST to the extent the charges are related to participants of the Rajasthan, and IGST to the extent of charges related to participations of Gujarat, blah blah blah. This is all immaterial. So whoever may be taking that service, the place of supply will always be Rajasthan only, and in the invoice CGST and SGST will be levied for the full value of the hotel accommodation services. For the full consideration, the place of supply will be Rajasthan, location of the supplier is also Rajasthan, intrastate supply on the full value CGST and SGST will be levied. Clear about it? Now let us come to the next fact. Right, so let us see this. The company purchased certain gift items for distribution to the participants in the conclave. So this company is conducting conclave now. To this conclave, various distributors will come. To them, they want to distribute some gifts. So they have procured certain gifts for the purpose of distribution to the conclave. Distribution to the for the purpose of distribution to the participants in the conclave. The gift items were purchased from the vendor located in Ludhiana, Punjab. So let us make the facts once again here. XYZ, where it is located, Delhi. They have purchased goods from whom? So there is a supplier of that gifts. So where he is located? He is located in Punjab. Okay, next. And they are required to be delivered at a hotel located in Udaipur, Rajasthan. Udaipur, Rajasthan, the goods will be delivered. So if you see here, this company placed the order with a supplier who is there in Punjab, but the goods are required to be delivered at Rajasthan. The hotel, wherever they are conducting the conclave, at that place they have to be delivered. If you pay close attention carefully, this is a bill to ship to transaction. This is a what? Bill to ship to transaction. So this supplier, whatever gifts he is supplying, he will bill that to the XYZ Limited, but he will ship it to the hotel which is located at Udaipur, Rajasthan. So in case of bill to ship to transactions, what will be the place of supply? So even though the goods are delivered at Udaipur, Rajasthan, it will be deemed as if this person has only received the goods. This will be deemed as if the delivery, the movement of the goods has come to an end at Delhi, and the place of supply will be Delhi only. Able to remember? If you remember the place of supply chapter when discussing section number 10, what is the place of supply for supply of goods? So there we have seen in case of one subsection will be there which will be talking about bill to ship to transaction. Okay, let me take you through that. Let me take you through that provision as well. So for better clarity, you will not get confused. Right. Payment of taxes. Where are you? Come on. Yes. So this is the place of supply, right? So in the place of supply chapter, if you remember section 10 of the IGST Act, so if you see here, it will be this subsection, section 10, subsection 1, clause B. So here, if you see, in case of bill to ship to transaction, what will be the place of supply? So where the goods are delivered by the supplier to a recipient or any other person on the direction of a third person, it will be deemed. So here, it will be deemed the goods have been received by the original buyer only, and the place of supply will be the location of that original buyer. So as per this 10 subsection 1 clause B, it is perfectly an example of bill to ship to transaction. So the place of supply will be Delhi. The place of supply will be Delhi, and the supplier is there in Punjab. So location of the supplier is there in Punjab. So location of the supplier is in Punjab, place of supply is in Delhi. Both are falling in two different states. It will be treated as an interstate supply, and on this invoice, whatever the supplier will give, what will be charged? IGST will be charged. Why? Because it is a interstate supply. Clear? Right. So let us have a look at the question regarding this. What shall be the place of supply in relation to gift items purchased by XYZ Limited? So what is the place of supply, guys? So it will be a perfect example of bill to ship to. The place of supply will be the location of XYZ, which is Delhi. Rajasthan, that is where the locations were received. No. Delhi, that is the principal place of business of the company. Yes. Punjab, no, not Punjab. Permanent location of the participant receiving the gifts, this also doesn't matter. The place of supply will be Delhi. It will be a perfect example of bill to ship to transaction. Next, let us come to next point. The company purchased an insurance policy for its employees traveling for the conclave, and the premium for such insurance policy was 1 lakh, which was paid by the company. There is no requirement under any law requiring such insurance policy. So this company XYZ Limited, what they have done is their employees are traveling. In the name of their employees, they have taken insurance policy. So on this insurance policy, that insurance vendor might have given an invoice. In that invoice, GST also will be there. You tell me, is the company entitled to claim the input tax credit on the insurance bill? No. The answer is no. Why? Because if you remember section 17, which we have discussed in the input tax credit chapter. Right. So let me take you through that provision also. 9th chapter. We have in our material as 9th chapter. Where is it? Where is it? Where is it? This is 6. This is 8th chapter. Yeah, immediately after this. Just a moment, guys. Okay. Yeah. See here, section 17. Blocked credit. If you read this, so section 17, subsection 5, blocked credit. If you come here, see here. So these are certain things which are blocked. There are certain transactions on which ITC will be blocked. In that, one thing is food and beverages, outdoor catering, beauty treatment, health services, cosmetic and plastic surgery, leasing, renting or hiring of the motor vehicles, vessels or aircraft. Sorry, not this one. Yeah, this only. Vessels or aircraft related aircraft referred to in clause A or clause AA, except when the goods are specified therein. Life insurance and health insurance services. Life insurance and health insurance. So if the company has availed any life insurance and health insurance services, on that also input tax credit will not be available. However, if the requirement, if providing of any of this is as per the requirement of any law, then input tax credit can be availed. Do you remember that? So if you see here, provided that input tax credit in respect of such goods are available, here it is. Yeah, this one. Provided that ITC in respect of such goods or services shall be available when it is obligatory for the employer to provide these to the employees under any law. But if you remember the question here, they clearly told there is no requirement under any law requiring such insurance policy, but still company has voluntarily taken the insurance policy. So on that, input tax rate, can it be availed by the company? No, it can't be availed by the company. Clear? So let us have a look at the question. Which of the following statement is true in relation to gift items and the insurance policy? And one more thing, guys, if you remember the previous point in the question, they told that the company has purchased some items for distribution as gifts. You tell me on that goods also, for example, here from the supplier in Punjab, they have bought goods. So that goods will be distributed as gifts. But whatever it is, this supplier might have given the invoice for the goods. On that also IGST will be levied. You tell me, can the company avail that ITC of the IGST? For this also answer is no. Even on the goods, whatever they have bought for the purpose of distribution as gifts, on that also ITC they can't claim. Even on this insurance policy also they can't claim the ITC. So how you are telling? This also, if you remember the provisions of the section 17. So let me show you one thing here. Let me take you through that relevant provision. See here, the last one. Goods which are lost, stolen, destroyed, written off, or disposed by way of gift or free samples. If you are buying any gift and you are disposing it as, if you are buying any goods and you are disposing it as a gift, on that you can't avail input tax credit. So two things here, whatever goods they have purchased for the purpose of distribution as gifts, on that also they can't avail input tax credit. Even on insurance, whatever they have bought on their employees, on that also input tax credit cannot be availed. So if you look at the question, so which of the following statement is true in relation to gift items and the insurance policy? The company is not eligible to avail the input tax credit in relation to both gift items and also insurance policy. For both the items, they can't avail the input tax credit. If you read the remaining options, the company is eligible to avail the input tax credit related to gifts valuing less than 50,000. No, this doesn't matter. They are going to this value of the gifts and all. They are going to section 7. So this is irrelevant here. The best option is the company is not at all eligible irrespective of matter of amount. So they can't take it as, they can't take input tax credit. Next, the company is eligible to avail the input tax credit only on insurance policy. No, on both they can't avail the input tax credit. There is no restriction in availment of ITC. No, there is a restriction. They can't avail input tax credit on both the gift items and also the insurance policy. Perfect. Next, this one. One more fact is there. The company took on rent a new warehouse near its factory in Delhi for storage and dispatch of the goods. So the company is having principal place of business already in Delhi. Now what they have done is, in the same state, Delhi, they have taken a warehouse. In the same state, they have taken a warehouse. Where? In the same state, Delhi. Now you tell me, if they have taken another warehouse, are they required to mandatorily take separate registration for this additional place of business? Not required. Why? Because this warehouse is also in the same state. There is no mandatory requirement to obtain separate registration for this additional place. What they can do is, within the same registration, they can declare this warehouse as an additional place of business without any requirement of new registration. Mandatory registration will become applicable if you have a place of business in another state. In the given case, they are taking a warehouse for rent in the same state of Delhi. There is no requirement of mandatory registration. There is no requirement of separate registration. Okay, next. The goods are being transported between the factory and the new warehouse in a non-motorized cart. Do you remember e-way bill provisions here? If the goods, if the movement of the goods is happening by way of a non-motorized cart, e-way bill will not be required irrespective of the value of the consignment. Irrespective of value of consignment, since the movement of the goods is taking place by way of non-motorized cart, e-way bill requirements will not become applicable here. Okay. The value of such goods are transported in a single trip is up to 5 lakh rupees. As I have told, irrespective of the amount, e-way bill is not required. Further, the rent of warehouse is 18 lakh rupees for the initial 11 months and shall be revised to 21 lakh after the expiry of 11 months. So they have taken one warehouse for rent now. They're telling what is the rent which is required to be paid. For the initial 11 months, it will be 18 lakhs. After that, it will be 21 lakhs. Okay, it doesn't matter. Right. So depending on this, there will be a few questions. Let us see that. Which of the following statements is correct in relation to the issuance of e-way bill for transportation of goods between the factory and warehouse in a non-motorized cart? So as I have told, e-way bill will not be required irrespective of the amount. So first option they are telling e-way bill is required to be issued. So this is obviously wrong. E-way bill is not required. E-way bill is not required to be issued in the given case irrespective of the consignment value. Yes, this is the correct option. E-way bill is required to be issued for goods of the consignment value above 50,000. In this case, it will not become applicable. E-way bill is required to be issued for the goods of the consignment value above 1 lakh rupees. This also doesn't matter here because the movement of the goods is happening by way of a non-motorized cart. So option B will be the correct option. Next, which of the following statements is most appropriate in relation to the new warehouse taken on rent by the company? As we have seen in the question, the company has taken a new warehouse on rent in the same state of Delhi. Regarding that, they have given a few statements. We need to find out which one is the correct one. Separate GST registration is not required mandatorily. 100% yes. Why? Because it is within the same state. No separate registration is mandatory. If the assessee himself voluntarily wants to take separate registration, he can do it. But as per the law, there is no mandatory requirement. Yes, option A is correct. Separate GST registration is required mandatorily. 100% no. GST is required as CTP for the term of rent agreement. No, there is no such provision. Separate registration is required once the rent is more than 20 lakhs per annum. We did not read any such thing in our content. So obviously the remaining three options are wrong. Only the first option is correct. So if you check the key, let us cross verify the answers with the key. So the key which we have decided is first one is A, second one is B, A, B, A, B, A, B, and then finally A. So let us cross verify that with the key. A, B, A, B, A. A, B, A, B, A. Yes, perfect. So I hope you are able to understand the facts and also the questions and also the answers to the MCQs, whatever has been given here. Clear, everybody? So with this, we are done with the MCQs. Now let us try to proceed further in understanding and solving the descriptive part. Okay, right. Let us do it now. So now let us start with question number 6. Let us see what they are saying. So obviously one question is going to be about calculation of your output tax liability and calculation of your input tax rate available and how much amount of cash you have to pay. So that one question obviously will be there in the question paper, which will be talking about payment of taxes. So the same question, the same kind of question is also there here. So let us have a look at the facts. Craft Limited, a registered dealer in Patna, very important. So this question is about a company called Craft Model Limited, where it is registered in Bihar, in the state of Bihar, is engaged in various types of supplies. It is not engaged in renting of cars business. So whenever they say these kind of facts, it is very important. When they're specifically telling the company is not doing certain thing, might be in the points which we are about to read, there is some connection with this point. So I will highlight it. So one thing which you have to always keep it at the back of our mind for this question, they have specifically mentioned somewhere that they are not into the business of renting of cars. Okay, noted. Next, the company provided the following details for the month of January. So whatever transactions they have done for the month of January 2024, those details they have given. So what are the facts of the question? Let us see. The facts will come to that later. So let us read this additional information. All the amounts given above are exclusive of taxes wherever applicable. Okay. So then this is something about this B point. This also will talk about it later. First, we will get to know what is the requirement of the question. Yeah, so the requirement of the question is you are required to calculate the amount of net GST liability payable in cash. How much amount of GST is liable to be paid in cash? That is how much ITC can be utilized, how much amount has to be paid in the cash. So that thing you have to calculate, that too for the month of January 2024. For the month of January 2024, you are required to calculate how much amount of GST liability is required to be paid in cash. Okay, so now let us get back to the question. So what are the facts of the question? First one, outward supply of goods made during the month to various non-related persons. So they specifically mentioned these supplies they have made to non-related persons. In case if you have made supplies to a non-related person, then the value of supply will be transaction value. So transaction value, we have to take it as value of supply. So what values they have, what outward supplies they have done? Number one, in the state of Bihar, intrastate, 3 lakh rupees is market value, 4 lakh rupees is transaction value. So what will be the value of supply? We will take transaction value. Market value is irrelevant. Why? Because the transaction is happening between non-related persons. So on this 4 lakh rupees, so let us make one statement here. Let us try to calculate. So calculation of our output tax liability. So we'll have two tables. In one table, we will calculate output tax liability, that too divided into how much is IGST, how much is CGST, and how much is SGST. Then we will have one more table where we will calculate our input tax credit. Input tax credit also will calculate how much is IGST, ITC is there. CGST ITC how much is there, and SGST ITC how much is there, that we will calculate. Then finally payment adjustments we will do. Okay. So in the state of Bihar, that means intra-state supplies, they have done 4 lakh rupees. So if you calculate intra-state supply on intra-state supply on 4 lakhs value, 9% CGST, 9% SGST, that will be their output tax liability. So if you calculate 4 lakhs into 9%, 36,000 rupees will be CGST, 36,000 rupees will be SGST. Am I correct? 4 lakh into 9%, then 4 is 36, yes, 100%. Next. Similarly, they have made interstate supply also. They have made what? Interstate supply also. So to other states, interstate supply, market value once again irrelevant. Transaction value 6 lakh rupees of interstate supply they have done. On that, they have to pay IGST. So 6 lakhs into 9. So let me take the help of the calculator here. So 9 6 are 54. Yes, 6 into, sorry, 18%, right? 6 lakhs into 18%, 0.18. So it will be 1,08,000 rupees of IGST. This is output tax liability regarding the first item. Okay, next. The company pledged its 5% equity shares to the merchant banker for the purpose of proposed initial public offer. The company has pledged its securities. As you all are aware, in the goods, securities will not be included. And even pledging of the shares is neither a supply of goods nor supply of service. The company pledged its 5% equity shares to the merchant banker for the purpose of proposed IPO. So the transactions in securities, the transactions in securities is neither goods nor services. So it will not be treated as any supply only. So on this transaction, there will be neither CGST nor SGST, nothing will be there. So this explanation has been given in the answer also. So let me explain you from the answer what they're trying to say regarding this. See here. So pledging of equity shares to the merchant banker. Supply includes supply of goods and services. Shares being securities are neither goods nor services. Thus a transfer of the shares, which is neither goods nor services, is not at all a supply. If it is not supply, there is no question of charging GST on the transaction only. Right? Okay. So second one, irrelevant. On that, because of that, no effect will be there. Fine. Let us come to the next one. Stock transfer of goods worth 58,000 without consideration to its branch at Gaya, once again in Bihar. The branch has been declared as additional place of business in the registration certificate. Guys, if you remember, in the supply chapter, we have discussed a few things. If you are doing certain transaction, even without consideration, still it will be treated as supply. You're doing certain transactions, still it will be treated as supply even without consideration, and those activities are given in schedule 1. Do you remember that? So if we go back to the schedule 1, if we go back to the supply chapter here, just I wanted to give you that clarity as well. Yes, come on, right. Supply GST, supply should be for a consideration, but however schedule 1, yes. So schedule 1 activities, if you see, some activities will be treated as supply even if it is made without consideration. In that, one point which I want to highlight here, this one, second one, supply of goods or services or both between related persons or between distinct persons as specified in section 25, when made in the course or furtherance of business, even without consideration, it will be treated as supply. So if the movement of the goods is happening, the supply of goods or services is happening between related persons or distinct persons as per section 25, even though there is no consideration, still it will be treated as supply. Now, sir, what is distinct persons as per section number 25? So this we have discussed in the supply chapter in a detailed manner. Sir, what do you mean by distinct persons? Take for example, a person is having a place of business in one state. Take Bihar only. He is having a principal place of business in Bihar. For this place of business, he has taken a registration. And he is having another place of business in Delhi. For Delhi, he will take separate registration. So both the entities are belonging to same entity, but both are having separate registration, but still they will be treated as distinct entities. If the movement of the goods is happening from the Bihar to the Delhi office, it will be treated as supply even without consideration because they are treated as distinct persons. One more case. Take for example, there is a company, it is having principal place of business in Bihar only. They are also having one more place of business they are having in Bihar. Here they have two options. Option number 1, either they can declare this as additional place of business and do it under and add it to the same registration. They did not take separate registration. But however, if the company has opted to take for this place of business separate registration, that is also permitted. Take for example, this entity has taken two separate registration for its two businesses in the same state. Then both of this will be treated as distinct persons, and if any movement is happening between them, if any supply of goods or services is happening between them, even if it is without consideration, still it will be treated as supply. But in the given question, if you pay close attention here, this company is having a place of business in Bihar. They have one more place of business in Bihar only, and they did not take any additional registration. They did not take separate registration for this additional place of business. They have simply declared this as an additional place of business to their main registration only. So here there is no question of distinct persons only. Here there is no supply of goods or services happening between distinct persons only. So that is why this will not be covered under Schedule 1. Schedule 1 only covers when the supply of goods or services is happening between distinct persons without consideration, then it will be treated as supply. But here there is no question of distinct persons only. Why? Because in the question they have clearly told this, they have not taken separate registration, they have declared it as additional place of business. There are no distinct persons here. Since there is no consideration, this is not at all a supply, and on this there are no GST implications. Hope you are able to understand this. So third point is also irrelevant. It will neither have an impact on our input tax credit, it will also not have an impact on output tax liability. You can simply ignore this as well. So first point we have considered, second point we have to simply ignore, third point also we have to ignore. Next, coming to the next one. Intrastate inward supply of various services for use in the course of business. 30 invoices are there. So they have purchased during the month some 30 invoices. Out of 30 invoices, details of 10 invoices amounting to 2,50,000 were not furnished by the suppliers in their GSTR 1, and resultantly that information was not reflected in the GSTR 2B. So if you remember, we can avail input tax credit only when it is reflected in GSTR 2B. So here totally they have made 12 lakh purchases, but out of that invoices amounting to 2,50,000 were not declared by their respective suppliers in their GSTR 1. So ITC regarding that 2,50,000 worth of invoices will not be reflected in GSTR 2B. Since this since this ITC in respect of this 2,50,000 is not reflected in GSTR 2B, you can't avail that input tax rate in respect of that 2,50,000 worth of supplies. So if you take that out from the 12 lakhs, if you take 2,50,000, the balance will be 9,50,000. ITC relating to that 9,50,000 supplies will be reflected in the GSTR 2B. That only can be availed as credit. Okay. So on 9,50,000, they can avail input tax credit. So this will have an impact on our ITC table, calculation of input tax credit. Okay. Right. But one more thing, let us try to find out, is there any opening balance regarding, is there any opening balance of ITC? So here they have clearly told there is no opening balance of input tax credit at the beginning of the relevant tax period. Okay, here there is no input tax rate. The first thing is this only. So 9,50,000, 18% is the GST rate. Yeah, see here, all other inward supplies and outward supplies will attract GST at the rate of 99 or 18. So on 9,50,000, what supplies are there? These are intra-state supply. So CGST, SGST will be there. So let me add that here. So in the ITC, on intra-state supplies, on 9,50,000. So on 9,50,000, 9% CGST credit will be there. The same amount will be there here also. 9,50,000 into 9% SGST credit also will be there. So if I calculate that as well, so 9,50,000 into 0.09, it will be 85,500 rupees of CGST credit and 85,500 rupees of SGST credit is also there. Very good. Let us come to the next part. Outward supply of services of milling of paddy into rice. Let's tell me, they have this company has provided outward services of milling of paddy into rice. Is it exempted or taxable? It is taxable. Sir, why it is taxable? Why? Because if milling of paddy into rice is not a agricultural activity, because it is going to change the basic nature of the product here. So that's why it is, and also it is making that we call an activity as an agricultural activity if it does not change the predominant nature of the product. So, and even we have seen in the exemption chapter, the process of the services of milling of paddy into rice changes its essential character. So that's why this activity is not exempted. This will not be treated as agricultural activity. This will attract GST. So this is taxable, and it is outward supply, intra-state. So CGST will be there, SGST will be there. So once again, we have output tax liability. So that milling of paddy to rice, these services are taxable. So 2 lakh rupees is the value of supply, 9% CGST, 9% SGST. So 18,000 rupees of CGST, 18,000 rupees of SGST has to be paid. Now let us come to the next part. Outward supply of services of giving trucks on hire to a governmental authority. Is there any exemption regarding it? No, there is no such exemption. See, there will be one exemption which will strike your mind. Sir, pure services provided to government are exempted. Yes, pure services provided only to central government, state government, local authority are only exempted. So here the services are provided to government authority, governmental authority. There is no exemption for this here. These services are 100% taxable. So 1,50,000, these also will attract GST, and it is also intrastate. 9%, 9% CGST and SGST is required to be paid. So if I write here, hiring of motor vehicles to governmental authority. To government authority, no exemption, these will be taxable. So 1,50,000 into 9. So 13,500 rupees of CGST, 13,500 rupees of SGST has to be paid. Next, amount paid to IIM Ahmedabad, Gujarat for providing 15 days management training to 10 managers from 10th January. The IIM provided participation certificates at the end of the training program. Guys, you tell me, this we have also read in the exemption chapter. So services provided, education services provided by IIMs, taxable or exempted. There we have seen we can divide the courses provided by IIMs into two categories. One is short duration courses, the other one is long duration courses. So in case of short duration courses, they will give some completion certificate. So those short duration courses will not be treated as providing of recognized curriculum courses. On that, exemption will not be there. On that GST will be imposed. So this IIM is providing management training for 10 of their managers, and it is that too only for 15 days. This is not exempted. So on this IIM, they will give invoice. On that GST they will charge, that can be taken as credit because it is related to the business only. And also it will be interstate supply. Why? Because IIM is registered, IIM Ahmedabad is registered in Gujarat, and our supplier is located in Bihar. So it will be an interstate supply. So it will be education and performance appraisal services. So for that services, the place of supply will be the location. For that, the place of supply will be, in case the services are provided to a registered person, location of the recipient will be the place of supply. So if you want me to read the explanation, let us have a look at that provision also in the answer. So see here, this one, ITC, it will have impact on the ITC. Where is ITC table? Yes, this is the ITC table. Training courses organized by IIM Gujarat. These are not exempted. Why? Because short duration programs offered by IIMs for which participation certificate is awarded are not qualification recognized by law. ITC is available in respect of supply of services which are used in the course or furtherance of the business. Further, the place of supply of service in relation to training and performance appraisal to a registered person shall be the location of the recipient. So the place of supply is going to be Bihar, being the location of the recipient, and location of the supplier is Ahmedabad, Gujarat. Both are falling in two different states. IGST will be levied. So 5 lakhs into 18%, 90,000 of IGST credit will also can be claimed. So on IIM Ahmedabad. So here, from here, 18,000 rupees of 18,000 only, no? 5 lakhs into 18%, right? 5 lakh into 18%. 5 lakh into 18%. It will be 90,000, sorry. So 90,000 rupees of IGST credit is also there. Very good. Let us come to the next part. So 90,000 only, no? Yeah, 90,000. What else they are trying to say in the question? Let us have a look at that as well. Next, yeah, this one. Purchased 8 tickets for its employees from Patna to Guwahati, Assam airport in economy class. Total fare was 1 lakh, out of which basic fare was 80,000. This is also one of the input services which has been received by the company. You tell me, will the company be able to avail the ITC on this transportation services, air transportation? The answer is no. Why? Because the service is altogether exempted. When the vendor has given you invoice, when the supplier has given you invoice, on that GST itself will not be there. It is exempted supply. Sir, why it is exempted supply? Persons embarking or terminating at certain airports. So for that exemption has been given. So, and one such place is Assam. So if you are embarking or terminating at a port located at Assam, so those services are exempted. Those air travel services are exempted. So here the airplane company, when they have given the invoice, on that they will not charge a GST only. That is the exempt supply. When there is no charging of the GST only, what is the question of claiming the input tax credit? So this also you can simply ignore. Understood? Next. Okay, I think all the facts we have considered. So let us see whether any extra information is there in the here. So this point is general point. All the amounts given above are exclusive of taxes wherever applicable. Fine, there is nothing to do here. Let us come to B point. During the course of arranging and filing documents, the accountant of Craft Model Limited observed that an invoice for 30,000 excluding taxes dated 2nd December 2023 was omitted to be recorded in the books of accounts and no payment was made against the same till the end of January 2024. This invoice was issued by Mr. Rahu Ketu of Patna, from whom Craft Model Limited has taken cars on rental basis. Invoice included cost of fuel also. Number one, first thing what you have to consider is they are telling this company has availed some services. This company has availed some services. What kind of services they have availed? They have availed services of renting of cars, hiring of motor vehicles. If you remember, if the company is availing the services of hiring of motor vehicles, unless they are into the same line of business, if the company is hiring the vehicles and they are also in the business of renting of the vehicles, then only ITC can be availed. For other companies, ITC will not be available. For other companies, ITC will not be available. Yes, this company, they have found that there is one invoice amounting to 30,000 dated 2nd of December, which was omitted to be recorded in the books of accounts and no payment was made against the same till the end of January 2024. The invoice was issued by Rahu Ketu of Patna for what kind of services? For taking cars on rental basis. Number one, if you have taken services of hiring of motor vehicle, unless you are in the same line of business, you can't avail ITC. So whatever may be the invoice on these services, the company is not at all eligible to claim input tax credit only. But here there is one more thing which you have to pay attention. So if you see here, renting of motor vehicles, this will attract a reverse charge mechanism. This will be attracting reverse charge mechanism. RCM will be applicable. Why? Because the company in question is a body corporate. The company in question is a body corporate, and renting of motor vehicle services, they will attract the tax under reverse charge mechanism. Being the recipient is required to pay the tax under RCM. The recipient is required to pay the tax under RCM. Who is recipient? Our company, Crafts Model. So in this case, recipient is required to pay the tax under reverse charge mechanism. Even though they pay the tax under reverse charge mechanism, they can't avail input tax rate. That one is sure. So it is not going to have an impact on our ITC. It will not be available for input tax credit. And one more thing here, RCM will become applicable. Sir, RCM is applicable, no, then it will come in our output tax liability. We have to pay. This company has to pay out of their pocket. So they have to pay the tax, no sir, on output tax liability. But here there is a tricky point. See here, in case of RCM, for services, what will be the time of supply rule? What will be the time of supply rule? So if I take you to the time of supply chapter, very interesting question, guys. Very, very interesting question. Little bit deep. This point is a bit deeper. So just I wanted to give you 100% clarity for this. We'll give you references here also. We'll go and have a look at the provision. Yes. So section number 13, how to decide time of supply of services. So in case of reverse charge mechanism, why? Because this service is getting covered under reverse charge mechanism. So in case of reverse charge mechanism, what is the time of supply? They say the time of supply will be date of payment as entered in the books of accounts, or date of payment debited in the bank account, date on which payment was debited in the bank account, or the date immediately following 60 days from the date of issuance of invoice. That means 61st day from the date of invoice, whichever is earlier, that will be the time of supply. One is date of payment recorded in the books of accounts, or date on which payment is debited in the bank account, or 61st day from the date of invoice, whichever is earlier. So that will be treated as place of supply. Sorry, that date will be treated as time of supply, and accordingly in that month the liability will fall. So here, if you pay close attention, the invoice was dated on 2nd of December. The invoice, when it was dated on 2nd of December 2023, that is the date of invoice. And if you see here, no payment was made against the same till the end of January also. So payment was not happened. So in the given case, since the payment did not happen even by the end of January, so first of all, what is the 61st day from the date of invoice? What is the 61st day from the date of invoice? If you calculate the 61st day, in December total 31 days are there. 2 days you have to take it out. So 29. In January, how many days are there? 31 days are there. So by 31st of January, how many days are over? 60 days are already over. So 1st of February 2024 will be the 61st day, and they have told payment did not happen. That means 61st day following the date of invoice is only coming earlier. So for this RCM, for this services, the company is required to pay the tax under reverse charge mechanism. But for this service, the time of supply is 1st of February 2024. So this liability will fall in the month of February 2024, not for the month of January 2024. In the question, they are asking us to calculate what is the value of what is the tax which is required to be paid only for the month of January 2024. But this particular invoice, the time of supply falls in the month of February, so it will not have any impact on our tax liability for the month of January. Able to understand? Clear, everybody? Very deeper point. See how many chapters they have linked. Here there is a reverse charge mechanism. They have linked a provision of reverse charge mechanism. They have also linked a concept of input tax credit, blocked credit. That concept also they have, that chapter also they have linked, and also they have linked the time of supply also. See, comprehensive question it is. They have connected 3 chapters here in one single point. So this question is related to reverse charge mechanism, charge of GST, and also input tax rate, and also time of supply. So whatever it is, after analyzing all these provisions, will this point have any impact on our output tax liability or on our input tax rate? No, it is not going to have any impact. Okay, next. Regarding pledging of shares, the value of the shares, see, they are giving extra information regarding pledging of the shares, but as I have told, pledging of the shares is neither supply of goods nor supply of services. This is not at all a supply only. There is no question of GST here. Right. So rate of GST applicable on various services, this also we have considered. Now from this we can calculate what is the GST amount which is required to be paid in cash. So first of all, let us do the totaling. What is our output tax liability? IGST we have 1,08,000 rupees of output tax liability. Then we have, what is this figure? So if I add this CGST amount, CGST 36 plus 18 plus 13.5, which will be 67,500 rupees of output tax liability of CGST, the same 67,500 rupees of SGST. And if you calculate ITC, what is the ITC balance we have? 90,000 IGST we have. So for then we have 85,500 rupees of CGST and 85,500 rupees of SGST. Now let us start discharging our liability. So first we have to utilize ITC of IGST. So IGST, how much we have? 90,000 we have. So first IGST will be adjusted against IGST. So after adjusting that, how much we have? How much balance is required to be paid? Come on, right. So how much balance we have? We need to pay 18,000 rupees of IGST. Then we have 67,500 rupees of CGST, sorry, and 67,500 rupees of SGST. But we have CGST credit. How much CGST credit we have? CGST credit we have for 85,500. So as we all know, CGST credit should be first utilized for CGST. So we'll utilize 67,500 rupees. If you take out that 67,500 rupees, how much is pending? How much credit is still left? 85 minus 67. 85 minus 67. So we have still 18,000 rupees of CGST left. That CGST can be utilized for the payment of IGST. So I will utilize that. After that, I don't have any IGST payable. I don't have any CGST payable. I have 67,500 rupees of SGST payable, but I need not worry. I have SGST credit. So 67,500 rupees of SGST I will utilize. Out of total how much value? Out of 85,500, 67,500 rupees of SGST I can utilize for discharging my SGST liability. So net I have to pay in cash is 0, but still I have excess SGST left for 18,000 rupees. This 18,000 rupees will be carried forward to next month. That's it. Clear? Right. So this is what regarding question number 6. Very interesting question. I find this question is very interesting and little bit complicated. Here there are many points, especially when it comes to this point. Here there are so many chances for the student for making the mistakes. Okay. Let us cross verify with the answer given here. So yes, this is their output tax liability. Yeah, same. ITC is also how much they have? 85, 85, 90. Yes, same IGST, same ITC also we have got it. Right. So let us have a look at the next questions. So question number 6 we are done. Let us have a look at now question number 7. So from here onward we can complete it very quickly. Briefly examine the taxable value of the supply in the following independent cases. They are just asking us to determine what will be the whether these services are taxable or what value is taxable, that they are asking us. Let us have a look at it. G1 Limited registered under GST provided services amounting to 10 lakh rupees to a governmental authority by way of sanitation conservancy. So this point we have discussed in the previous amendments also. Whatever services you are providing to the government authority which is related to sanitation conservancy, those services are exempted. Government has included them in the notification, exempting them from GST. So these 10 lakh rupees will be completely exempted. These are not taxable. Next. So this is exempted. Raju Transporters, a registered GTA, Goods Transport Agency, provided service of transportation of goods to Kukreja and Kukreja Co., a unregistered partnership firm. So you tell me guys, a GTA services provided to partnership firm, whether registered or unregistered, is it taxable or exempted? It is taxable. No exemption is there for partnership firm, whether they are registered or unregistered, doesn't matter. If GTA services are getting provided to a partnership firm, will they be taxable? Yes, 100% they will be taxable. Is there any exemption? No exemption. So Kukreja and Kukreja paid 8,000 rupees to Raju Transporters as consideration. Is it taxable or exempted? It is taxable. 100% is taxable. No exemption is there for partnership firms. If the recipient is partnership firm, no exemption. Next, if it is unregistered individual or unregistered casual taxable person, then it will be exempted. But here there is no exemption. Next. Amardeep Hospital provided services in neonatal intensive care for 2 days, for which 15,000 are charged per day from Mr. Chopra for his newborn son Virat. Exempted or taxable? Exempted. Services by way of intensive care unit, neonatal care unit, whatever may be the consideration, it will be exempted. In healthcare exemptions, we have covered it. The same explanation, even you will be able to find it in the answer. So that will be exempted. Neonatal services will be exempted. So if we read the answer for your convenience, services provided to government authority by way of sanitation conservancy is exempt under GST. The services provided by G1 Limited registered under GST amounting to 10 lakhs is exempted. Next, services provided by a GTA to unregistered person, including unregistered casual taxable person other than partnership firm, whether registered or unregistered, is exempt. That means if you provide GTA services to partnership firm, they will be taxable. Other than partnership firm, unregistered persons, it will be exempted. So thus GTA services provided to partnership firm, including association of persons, whether or not registered under GST law, are liable to tax. There is no exemption. These services are taxable. Next, the services provided by a clinical establishment by way of providing room. Generally, if the room charges are exceeding 5,000 per day, they are taxable. They are not exempt, except that charges are for intensive care unit or critical care unit, intensive cardiac care unit, or neonatal intensive care unit. So for these kind of services, even though the consideration is more than 5,000 rupees, still they are exempted. So in the given case, 15,000 per day they have charged, total 30,000 they have charged. Is it exempted or taxable? It is exempted. Why? Because it is a neonatal care service. Next one. Let us come to the next question. Fine. So let us come to question number 8. Ranmo Limited, a registered entity under GST, has demerged its operation with effect from 31st of October. Okay. The registration of Ranmo Limited has been cancelled suo moto by the proper officer. Registration was cancelled by the on suo moto basis by the proper officer. The order of cancellation was passed on 4th of November, but it was served to the registered person on 7th of November 2023. So we know one point, registration can be cancelled by the proper officer on his suo moto basis. So the same thing happened here. The proper officer himself took the initiative, cancelled the registration. The notice was served to the persons on 7th of November 2023. Ranmo Limited wishes to apply for revocation of cancellation of registration on 4th of February 2024. The tax consultant of Ranmo Limited advised that application for revocation of cancellation of registration is time barred and hence not valid in law. So the notice of cancellation of registration was served to them when on 7th of November 2023. When they have made the application for revocation of cancellation on 4th of February 2024, they have made a revocation. But their tax consultant is saying that no sir, this application is time barred, you can't apply for cancellation of revocation on 4th of February. Is it acceptable? No. So because we have recent amendment in case of suo moto cancellation by the suo moto cancellation of registration by the proper officer, the application for revocation of cancellation of registration can be made from 90 days, within 90 days from the date of service of the notice. Earlier it used to be 30 days, but there was a recent amendment. Application for revocation of cancellation can be made within 90 days from the date of service of the notice. So if we calculate 90 days, so when the notice was served, 7th of November 2023. So ignore that 7. So in November, 30 minus 7. How many days? 23 days in November, 31 in January, 31 in December 31, January 31. By here, how many days are over? 23, 31, 31. How many? 3, 4, 5, 85. 2 plus 3 plus 3. Yeah, 85. So till here 85 days only. And one more in February 5. So up to 5th of February, they can make an application for revocation of cancellation. The time limit is there till 5th of February to make an application for revocation of cancellation. And actually, the company has submitted an application for revocation of cancellation on 4th of February only. Within 90 days, they have made an application for cancellation of registration. This application is 100% valid. The advice given by the tax consultant is not valid. He is telling it is time barred. No, it is not time barred. The application for revocation of cancellation was made well within time. You are required to examine the technical veracity of the advice given by tax consultant. They are asking whatever the advice the tax consultant has given, is it valid? No, it is not valid because the application for revocation of cancellation has been made within the prescribed time limit. So if you see here, the same explanation will be there. First, they will explain the entire provision. So all these provisions are there. So a registered person whose registration is cancelled by the proper officer may subject to the provisions of Rule 10b, that is after doing other authentication. So he can make an application for revocation of cancellation of registration within 90 days from the date of service of the order of cancellation. However, if the proper officer is of the notion that this time limit can be extended, who is not below the rank of additional commissioner or joint commissioner, they can exceed the time limit by furthermore 180 days. This is the provision. Thus, in the given case, Ranmo Limited can apply for revocation of cancellation of registration within a period of 90 days from the date of service of the notice of order of cancellation, that is within 90 days from 7th of November. The application submitted for revocation of cancellation of registration is valid in law as the same has been submitted within the prescribed time limit. So thus the advice given by tax consultant of Ranmo Limited is not valid. The application was perfect. They can make a valid application for revocation of cancellation. Good. Let us have a look at the next question. Question number 9. Mr. X, a registered person under GST, has aggregate turnover in the preceding financial year amounting to 8 crore rupees. So since the aggregate turnover has exceeded 5 crore rupees in any of the financial year from 2017-18, e-invoicing will become applicable here. He is desirous to know whether e-invoicing is applicable for supplies made by registered person to government departments or establishment or government agencies or local authorities or PSUs which are registered solely for the purpose of deduction of TDS as per section 51 of the CGST Act. You are required to advise Mr. X. This was a circular. This circular we have explained in our regular classes also. Once again I will explain. So what they are trying to say here is, as you remember, in case if the aggregate turnover has exceeded 5 crore rupees, you will be required to issue e-invoice for all the B2B supplies. For all B2B supplies, you are required to issue a e-invoice. Now, the doubt which has come here is, take here Mr. X is a registered person. His aggregate turnover has exceeded 5 crore rupees. So e-invoicing is becoming applicable whenever he is making a B2B supply. Whenever he is making a B2B supply. What is B2B supply? If the recipient is also a registered person under GST, then we call it as a B2B supply. So if the recipient is also a registered person, then for all that B2B transaction, he has to mandatorily generate a e-invoice. Now the question which has come before the GST department is, sir, there are some government departments or establishments of government authorities will be there. As per section 51, some government authorities like government establishments, government departments, they are required to deduct TDS. They are required to deduct TDS under section 51. And if a person is required to deduct TDS under section 51 of the GST Act, they are required to take a separate registration. So obviously these government entities, government establishments or local authorities who are required to collect the TDS, they will take registration as per section 51. Now this person, Mr. X, is making one supply to one of the PSU. Take for example, to one PSU he is making a supply. And this PSU has taken registration not because it is making any outward taxable supply. This PSU has taken registration exclusively because they are required to deduct TDS. This PSU has taken registration under GST to deduct TDS under section 51. Now the doubt which has come to the GST department is, which has come before the GST department is, sir, you are telling in case of B2B supplies, they are required to give e-invoice. But this PSU or government authority or government department which has taken registration only for the purpose of deduction of TDS under section 51, will they also be treated as normal registered person? Will that transaction also will be treated as B2B supply? And for that transaction also is e-invoice required? Yes. What did the department say? Yes. even though if the recipient is a government department, government establishment, PSU or local authority who has taken registration exclusively for the purpose of deduction of TDS, still that recipient also will be treated as registered person. That transaction also will be treated as B2B transaction, and if e-invoice becomes applicable, even on these transactions also e-invoice is required to be generated. This is what the government has given a circular and clarified it. On that circular alone, this question has been tested. The same extract of the circular you will be able to find out in the answer. So if you read it, government departments or establishments or government agencies or local authorities or PSUs, sorry, which are required to deduct TDS under section 51 of the CGST Act are liable for compulsory registration. Therefore, government departments or establishments or government agencies, local authorities, PSUs registered solely for the purpose of deduction of TDS are to be treated as registered persons under the CGST law as per the provisions of section 294 of the CGST Act 2017. Accordingly, the registered person whose turnover exceeds the prescribed threshold limit for generation of e-invoicing is required to issue e-invoices for the supplies made to such government departments, establishment, government agencies, local authorities or PSUs also. Yes, e-invoicing requirements will become applicable. Next, let us come to the next question. Last question, I guess. Briefly explain the manner of dealing with differences in ITC available in the auto-generated statement containing the details of the ITC and that availed in the written prescribed in terms of Rule 88D of the CGST rules. Nothing but they're asking you about that 88D rule. What does 88D rule say? As I have told, whatever GST or whatever input tax credit that has been reflected in GSTR 2B, only that input tax credit can be availed in GSTR 3B. So as we all know, GSTR 2B is an auto-generated statement. GSTR 3B every month or every quarter you have to file. In the GSTR 3B, you can avail input tax credit. But one condition which has been put is one of the conditions which is required for claiming ITC is whatever ITC that is reflected in GSTR 2B, only that ITC can be claimed in GSTR 3B. Take for example, in the GSTR 2B, ITC reflected is only 10 lakh rupees. In the auto-generated statement of GSTR 2B, ITC reflected is only 10 lakh rupees. But some registered person, while filing his GSTR 3B, he availed ITC of 12 lakh rupees. That means he is availing excess ITC than as shown in the GSTR 2B. Then what will happen? Then what will happen to that registered person? An intimation will be sent, and this intimation will be sent to the registered person. And the registered person is either required to reply to that intimation or pay that amount back to the government. Either he has to explain why he has claimed that excess 2 lakh rupees in addition to the amount reflected in GSTR 2B, either he has to give a reply or he has to pay that excess amount back. Whatever 2 lakh rupees he has claimed extra, that has to be reversed. That has to be paid back to the government either by way of ITC or by way of cash. So this is what rule number 88D says. That 88D extract only they are asking. Let us have a look at it. Yes. So if you see here, rule 88D of the CGST rules 2017 provides as follows. Where the amount of ITC availed by registered person in the return for a tax period furnished by him in form GSTR 3B exceeds the ITC available to such person in accordance with GSTR 2B in respect of the said tax period by specified amount and percentage, the said registered person shall be given an intimation in the prescribed form electronically on the common portal, and copy of such intimation will also be sent to his email address. And such intimation, in that intimation what will be there? In that intimation they will highlight the said difference and they will ask him to either pay an amount equal to that excess ITC availed in form GSTR 3B along with interest payable, and also explain, or either one thing you have to do, either you have to explain the reason why you have claimed the excess ITC, or you have to give it back within how many days? Within a period of 7 days. Either reverse the amount whatever excess ITC you have claimed, or you have to explain the reason. Within how many days? Within 7 days. So that intimation will be sent. On receiving that intimation, that registered person, as I have told, either he should pay an amount equal to the excess ITC along with the interest, or he has to give a reply why he has claimed that excess ITC within a period of 7 days. Sir, what will happen if the registered person is not replying back? If the registered person is either not replying back or he is not reversing the amount within 7 days, then what will happen? That amount will be recovered by the department as per the provisions of section 73 or 74, which will read it at the CFNR level. So where any amount specified in the intimation remains to be paid within 7 days period, and where no explanation is furnished by him in default, or the explanation or reasons furnished by such person is not found to be acceptable by the proper officer, then the said amount shall be liable to be demanded. That means either you are not giving a reply within 7 days or you are not paying back that excess ITC, then the government will have the right to collect the demanded amount as per section 73 and 74. That means they can proceed on you legally and collect that amount. So section 73 and 74 actually we'll discuss at the CFNL level. Clear? So these are the questions from RTP. I hope you guys are able to understand. If you still have any further doubts, you can always feel free to reach out to me. Thank you everybody. Take care. See you.